Welcome to our weekly roundup of key economic and business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's top stories. IMF team here in September. Emergency power purchases outline. 10-year national tourism policy approved. In our main story this week, the International Monetary Fund will send a team to Sri Lanka in September. The delegation will be in the country from 14th to the 27th of September, conducting its first review of an extended fund facility arrangement. According to the multilateral agency spokesperson, the review will be conducted on data from the month of June. Sri Lanka hopes to wrap up a debt restructuring by October to receive the second tranche of IMF's $2.9 billion facility. According to Kanchana Wijesekara, Minister of Power and Energy, Sri Lanka is expecting to finalize power purchase agreements with ACE Ambalapitiya and ACE Matara power plants soon. Adding that the two companies will be given fuel, they are only expected to provide the machines. Emergency power purchase was required as Sri Lanka is currently experiencing a significant drought in many parts of the country, resulting in water levels in the reservoirs falling. The situation was aggravated as water from the Samanala River was released for southern province farmers to harvest paddy cultivation. Sinopec is expected to start operations in Sri Lanka from September 20th. Minister of Power and Energy Kanchana Wijesekara said that they will be allowed to sell fuel for less than the maximum retail price set by the government, adding that Sinopec's entry will help reduce pressure on Sri Lanka's foreign exchange reserves. Australia's United Petroleum and US firm RM Parks, in collaboration with Shell, are the other two companies that have received approval. In a sign that the economy is yet to recover, the manufacturing index in July continued to decline. Most respondents in the food and beverages sector stated they suffer from subdued demand conditions despite the reduction in market prices. While manufacturers in the textile and clothing apparel sector endured a lack of new orders amid tense competition in the global market and unfavorable demand conditions. Meanwhile, the services sector PMI increased further, indicating continued expansion in the services activities. In our weekly tourism update, the Cabinet of Ministers approved a 10-year national tourism policy. The policy will cover the entire industry, including regional development, increasing female participation, identifying new tourist attractions and markets, among others. According to Priyantha Fernando, chairman of the Sri Lanka Tourism Development Authority, the policy serves as a blueprint for a dynamic and sustainable growth path for the tourism sector. The move follows this week President Wickremesinghe inaugurating the highly anticipated short-term tourism campaign Rejuvenating Sri Lanka. The two-phased marketing blitz involves promoting Sri Lanka in 4 key source markets, followed by an extensive long-term campaign targeting 14 markets from October. During the first 15 days of August, 77,552 tourists arrived in the country. This pushed the year-to-date visitor numbers to just over 845,000, 17% higher than last year's full-year arrivals. Daily arrivals in the month rose to over 5,170, highest since February 2020. Arrivals from India almost doubled during the week. Its share of tourist arrivals increased to 19% this week, up from 15% a week earlier. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on 91 and 182-day maturities significantly contracted. Bids amounting to 286 billion were received, of which 180 billion rupees were accepted. The Sri Lankan rupee was volatile against the dollar this week, with the central bank's indicative mid-spot rate ranging between 319 and 321. And that's a wrap for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.